Shares of data analytics firm Palantir Technologies delivered a strong move higher during afternoon trading as newly released inflation data came in cooler than Wall Street had expected. This shift in the macroeconomic picture reignited optimism across the market, particularly among investors watching for any signal that the Federal Reserve may soon pivot toward lowering interest rates. The positive reaction highlighted just how sensitive growth-focused technology stocks remain to changes in inflation expectations and monetary policy outlooks. The catalyst behind the rally was the latest inflation report for November, which showed a noticeable moderation in price pressures. The Consumer Price Index, one of the most closely watched indicators of inflation across the United States economy, rose 2.7% on a year-over-year basis. This reading fell short of economists' forecasts, which had anticipated inflation to climb at 3.1%. The myth suggested that inflation may be cooling more rapidly than previously thought, offering relief to markets that had been grappling with elevated prices for an extended period. Digging deeper into the report, core inflation also surprised to the downside. Core inflation, which strips out the more volatile categories of food and energy to provide a clearer picture of underlying trends, increased 2.6% year over year. This result came in well below the consensus estimate of 3.0%. Together, these figures painted a picture of easing inflationary pressure and reinforced the idea that the worst of the inflation cycle may be behind us. As investors absorbed this data, expectations quickly shifted. Market participants grew increasingly confident that the Federal Reserve could soon have the flexibility to begin cutting interest rates. Lower interest rates tend to reduce borrowing costs for corporations, improve cash flow dynamics, and increase the present value of future earnings. These conditions are especially supportive for growth-oriented technology companies, whose valuations are often closely tied to long-term earnings potential rather than near-term profits. Following the initial surge in Palantir Technologies shares, the stock cooled slightly but still held onto most of its gains. The share settled at $185.94, representing an increase of 4.6% compared to the previous closing price. While this move was notable, it was not entirely out of character for the stock. Palantir Technologies is known for pronounced volatility, having experienced 45 separate price moves of more than 5% over the past year alone. Against that backdrop, the market appeared to view the inflation-driven rally as meaningful, though not necessarily a development that would fundamentally alter long-term perceptions of the company's business. The timing of the rebound was also important, as it followed a sharp decline just one day earlier. In that prior session, Palantir Technologies shares fell 4.9% amid growing concerns around high valuations and the uncertain profitability timeline of artificial intelligence investments. That sell-off contributed to broader weakness across Wall Street, extending the market's losing streak to a fourth consecutive day. Investor anxiety centered on whether the elevated prices assigned to artificial intelligence-related stocks could be justified in the near term. Those valuation concerns were fueled by ongoing questions about how quickly heavy spending on artificial intelligence infrastructure and software will translate into meaningful financial returns. While enthusiasm around artificial intelligence remains high, many investors are becoming more cautious about the pace at which revenue and profit growth will materialize. This skepticism has led to increased scrutiny across the entire sector. Supporting this more cautious view, a recent survey conducted by Union Bank of Switzerland offered sobering insight into enterprise adoption trends. According to the survey, only 17% of large organizations are currently using artificial intelligence initiatives at scale. This finding suggested that while interest in artificial intelligence is widespread deployment and monetization may take longer than previously assumed. As a result, expectations for near-term revenue growth from artificial intelligence-driven products have been tempered, prompting investors to reevaluate valuations across the space. Additional unease emerged from reports involving a stalled $10 billion financing agreement tied to a data center in Michigan. The deal reportedly involved cloud computing giant Oracle and Blue Owl Capital. Although Oracle disputed elements of the reporting and stated that it had chosen a different equity partner, the situation nonetheless unsettled markets. The reported reason for Blue Owl Capital's withdrawal centered on concerns about Oracle's rising debt levels and unfavorable deal terms, which struck a nerve with investors. This episode raised broader questions about how hyperscale technology companies are funding massive infrastructure expansions. Some investors worry that these firms may increasingly rely on higher-risk private equity structures rather than deploying their own capital, potentially increasing financial vulnerability during periods of economic uncertainty. These concerns spill spilled over into the broader technology sector, adding to recent volatility. Despite these near-term headwinds, Palantir Technologies has delivered extraordinary performance over the longer term. The stock is up 147% since the start of the year, reflecting strong investor confidence in the company's role within the expanding artificial intelligence ecosystem. Even after this impressive run, the shares are still trading 10.3% below their 52-week high of $207.18, which was reached in November 2025. Looking further back, the long-term returns are even more striking. An investor who placed $1,000 into Palantir Technologies shares 5 years ago would now be holding an investment worth $7,160. That level of appreciation underscores both the opportunity and the volatility inherent in high-growth technology stocks. Stepping back to consider the broader narrative, history offers an intriguing comparison. The 1999 book Gorilla Game famously anticipated the rise of dominant technology platforms like Microsoft and Apple well before their supremacy was obvious. The central idea was to identify platform winners early, before their advantages became fully priced into the market. Today, a similar dynamic may be unfolding within enterprise software, where companies that successfully integrate generative artificial intelligence into their platforms are increasingly viewed as the next potential market leaders. In this context, Palantir Technologies continues to sit at the intersection of data analytics, enterprise software, and artificial intelligence. While short-term price swings may be driven by inflation data, interest rate expectations, and sector-wide sentiment, the longer-term debate remains focused on execution, adoption, and the pace at which artificial intelligence capabilities translate into durable revenue and profitability. With that being said, I will see you in the next video.